This is this week's market outlook. We're going to start off with some quick fundamentals that we have been following for the past few weeks, even few months, for certain things, and then also the fundamentals that we're going to keep in the back of our mind for this week, and even just preparing for next week as well when we're looking into the trades and the opportunities that we're going to take advantage of into the markets this week. So we're going to start off with some of the geopolitical side. So we have already been following the Russia-Ukraine war. You're starting to see some increased tensions there as well. Tensions in the Middle East, not much has changed there, besides the fact that there are a lot more officials who are coming out now and expressing hope for a ceasefire deal. That doesn't mean that it has just officially happened or anything like that. So there's still tensions happening for these two. And then also you have the elections in the US. So Trump versus Harris. And that's very important as well when you're looking at the grander scheme of things and overall fundamentals in general as well. Because anytime a president takes office or a new prime minister comes into office for any country, their policies tend to affect the consumers and the economy overall. So these are policies like fiscal policies, policies around taxes, government spending, anything like that, that could impact the consumers, the investors, and the economy overall. So these are the three main things that we're also keeping in the back of our mind as we're going into this week and also the next following weeks as well. And then onto the US side, which we have been seeing that the markets are heavily volatile anytime there's any sort of employment data coming out lately, is because the Fed and any central bank has two mandates. One of them is price stability, which is inflation, controlling inflation. And then the other one is maximum employment, which means having a strong labor market. So when it comes to inflation, what we have been seeing is that ever since COVID, that was one of the main targets or main focus of the Fed, which was just controlling inflation. But right now, all it's about is just a weakening employment landscape, right? That's all they're focusing on at the moment. So the last 2 years, 3 years, 4 years, what we have been seeing is that the Fed was having a really heavy focus more on the inflation side. And anytime there was CPI data that was coming out or any sort of inflation data that was coming out that could really impact the consumers, we saw a lot more volatility there. The last couple of weeks, what we have been seeing is a shift in the markets where, and even with the Fed officials, where it went from inflation volatility or reactions to inflation data to now more onto the employment side and the labor market side. And so we have CPI that's coming out, this week, but the sentiment is that things will be different, that there's not going to be too much volatility, compared to what we have seen in the past. And that's because a lot of the focus is now on that weakening employment landscape. What does that basically mean? The last couple of employment data points that we have been seeing, the last couple of NFP data that we have been seeing has been showing a soft labor market, a weakening labor market, not as many jobs opening up. You have unemployment rate that's also increasing. So when you look at last week, for example, starting on Wednesday, we had already started to see the market kind of reacting to, what the predictions are, even late Tuesday, actually, Asian session, and then going into the rest of the week when it comes to the labor market. The reason why is because inflation is already coming back down to normal levels or levels that, pre-COVID levels as well, and coming back to that 2%, which is what the Fed wanted. But when it comes to the labor market, you're starting to see that it's a lot weaker. And now that is going to be the determining factor for how aggressive the Fed is going to be when they're talking about interest rate cuts. So on Wednesday, we started off with the JOLTS job openings. So these are how many jobs are opening up during the reported month. It comes out 35 days after the month ends. So this is last month. So more in August data points, basically, where we were expecting that there are going to be more jobs that are going to be opening up. We're sitting at that 7.91. At previous, we're expecting 8.09, but we ended up getting even less jobs compared to the previous and the forecast. So we had a little bit of volatility there as well. And then continuing down onto Thursday, we had the challenger job cuts. We also had the ADP non-farm employment change coming out, and you had unemployment claims coming out as well. All of these data points when you take them all together and take a look at it from a holistic approach, it shows you that there are less jobs opening up, which means less people are being employed, and there's people that are still, claiming unemployment claims. When you're looking at this data point that comes out every Thursday, this is individuals who have applied or filed for unemployment insurance for the first time during the past week. Right. So these are not people who have already applied, weeks ago when they lost their jobs. These are people who have filed it for the first time. All of that prepares you for whatever happened on Friday, which is NFP. So unemployment rate also increased. When you look at NFP, we were expecting more jobs to open up, almost double of whatever the previous was. But we had obviously more jobs opening up, but not as many as we were expecting. So all of that taken into consideration, the employment data is really what caused the volatility that we have been seeing in the markets lately. So this week, what we are going to see some of the key fundamentals to watch out for. If you're trading in pre-London or London session, you're going to watch out for the claimant count change, which is basically UK's unemployment claims. So again, people who are claiming unemployment related benefits during the previous month, 16 days after the month ends. So this is pretty fresh data, so to speak. This is August data. So we're expecting that there are going to be a little bit of less people, but given other data points that we can watch out for, this is pretty much something that you can predict well, and the market will be reacting to it. And then continuing down onto Tuesday, you have the GDP data coming out from the UK as well on Tuesday, pre-London session. So once again, or Wednesday pre-London session, you have a lot of economic data points that will be coming out, but for the most part, we're expecting the market to react a little bit more to GDP. Then going into Wednesday, you have CPI data coming out from the US. As we just saw that, the traders are obviously going to be watching CPI data, but there's a lot more volatility and a lot more reaction when it comes to employment data in the US. So this is not to say that it's not going to be important. Just make sure that you're kind of setting up your trades, either a session before or after the news has come out, instead of just trading the news, because still there's going to be some volatility. Then going into Thursday, we have interest rates coming out from Europe, where you are expecting a rate cut. So last week and the last couple of times, we have been seeing that central banks are coming a little bit more in line with the expectations of rate cuts. Besides Bank of Japan, they're the only ones who are really increasing the interest rates out of some of the major central banks, right? So when it comes to Europe, when it comes to Canada, when it comes to the US, when it comes to the UK, we're expecting pretty much the same thing, which is rate cuts. Right now, the only difference is how aggressive they're going to be. And then going down into New York session, you have core PPI coming out. So again, inflation from the producer side. If you're starting to see that inflation is increasing here significantly, then that's the inflation that's going to be pushed over to the consumers. So the next time CPI comes out, that's kind of what we can expect to see. But here, same thing for CPI and PPI. We're sitting around those 0.2 levels. Not much of an increase, nothing too crazy. And then Thursday, of course, you have unemployment claims that are coming out, so the market will be watching out for this. And then after that, we kind of have a slow end to the rest of the week. So let's go ahead and move on to the technical side. Sitting at US30, we are currently at those all-time high levels, sitting around, let's say, 41,600, and we can adjust these as we go down to some of the lower time frames. But what I do want us to kind of pay attention to and kind of keep in the back of our mind as well is that we're sitting at some of the key profit taking levels as well. So anytime price has essentially created a new high and tapped into new highs, we have always seen some profit taking, price reversing back, buyers still kicking in, right? Because we don't have enough fundamentals that are kind of supporting any sort of bearish move just yet. We are talking about those rate cuts, and we're talking about, how aggressive is the Fed going to be. We have finally, as we're coming back closer up to these levels in the last couple of weeks or so, is really when we have gotten the confirmation of that there is going to be a rate cut in September, so next week, but we are not sure of how aggressive it's going to be, right? So you do have some reversals happening here, some corrective moves happening here of this massive bullish run up. But right now, essentially what the market is doing is coming back down into the lower levels and looking for better buy opportunities to kind of push back up until, we go into next week and kind of figure out how aggressive is the Fed going to be with their rate cuts. So that's going to be the one level that we're going to mark off. And then I'm also going to mark off the previous high here, which again, we're going to adjust as we drop down to lower time frames because we are focusing on investment investment opportunities that we can take advantage of at the moment. You come down onto the weekly time frame and you start to see how important both of these levels are, where you see that price has come back up and kind of tapped into these areas, rejected that, and you start to see a sell-off. This is a level that we're going to keep, or a significant level that we're going to keep in the back of our mind as well, because that's really where price started to consolidate out for a few weeks before pushing back up, creating a new high, rejected into that level here, which helped that push up, once again rejecting here, and then kind of coming right back down into this general zone, collecting some more orders, pushing back up. We came pretty close up into this 41,600 level, rejected that, and then start to pull back down, tapping into same exact level as previously, and then finally pushing up, creating a new high. So now pretty much the expectation is, can we start to see a deeper pullback, essentially coming back close, somewhere close to the zone, so around 39,000 or 39,800, so anywhere in between this little range. And the market comes back and grabs some more orders here prior to a pushback up, leading into next week, where the interest rates will be coming out, and looking for better sell opportunities when there are discussions around a rate cut and how aggressive the rate cut's going to be, right? So are we coming with a quarter basis point or a half basis point? So this is going to be a significant area of trading and finding more opportunities leading right into next week. So I'm not going to adjust any levels just yet. I'm going to try to look for more and better price action on some of the lower time frames. So now when you drop down to the daily time frame, what we start to see is pretty much confirming what we saw on some of the higher time frames. Consolidation, price failing to continue that bullish momentum, reversing back down, collecting some more orders in this overall, this general zone, right? And then same thing here, comes back, taps into it once again, pushes back, reverses back down, corrects this entire bullish push up. And then finally, as we try to break back above, we come back and create a new high, pull back down, coming back down into some of these previous areas, collecting some more orders, pushing back up, creating a new high here. And now at each of these points, all of these are very important. As you can see, these are some of the longer term trade opportunity setups that you can take advantage of. So in this case, pretty much what price did was consolidate out here before a massive sell-off. Same thing here, we came back, maintained that bullish push up, consolidated into the same exact level, which gave us the volume to continue pushing up and creating a new high, right? That's significant. And then coming back down here into this previous consolidation areas, collected some more orders. And this is really when we start to see that JOLTS job openings and the unemployment claims and the ADP non-farm, like all that stuff coming out. And then finally with NFP, we had a massive sell-off. So all of that simply just to collect some more liquidity and then push back down. What we want to see is, can price come back down into this 40,000 range as the market starts to open up and carry that volume from Friday, essentially, some of those fears that the market had with the weak and the soft labor market and the weak employment data, come back down into some of these areas and potentially correct that sell-off that happened here temporarily. And then going into next week, can we start to see a bigger sell-off? So that is something that I'm going to be kind of watching out for as the market starts to open up, essentially pushing back up just to grab better sell opportunities going into next week. But the very important zone for me that I'm going to be watching out for is going to be around that 40,000 and that 39,800 level, and just to see if we're going to push back up here a little bit. But again, all that's kind of dependent on us playing that market sentiment and carrying that from Friday as well. Now, when we come onto the 4-hour time frame, what we start to see is this entire area that price respected as support. We finally broke below that. Look at that massive liquidity grab up top here. So this is Friday, 6 a.m. PST, which is 9 a.m. Eastern time. which is right around that New York Stock Exchange open, and we start to see that entire pushback down here. And then the market closed down, creating some new lows, but we have yet to come back into some of these areas right about here. So I want to see if price can continue pushing down here. I want to see how it's going to react here, and then look for a better buy or sell opportunities. I'm not entertaining sells just yet. I'm going to give the market some room to kind of move as the market opens up in the next couple of hours or so, going into Asian session and then even London session. So the first two sessions I'm going to kind of sit out and then see how the market is reacting, and then look for better opportunities. I want to see how the market or the price reacts into this zone here specifically. And then we have this quick little range here to trade. And then after that, I'm looking for potential buy opportunities to come back and revisit here, correct and respect this entire important zone right here where the market has been consolidating and tapping into several times, essentially grabbing liquidity, and then look for a better sell opportunity going into next week. And that kind of checks out with the volatility that we start to see on the VIX as well, right? So this is something that I'm just lightly following just to see the volatility in the markets. So last time we started to see a massive volatility, that was again like that carried volume from NFP essentially. And then same thing here last week when the market kind of closed out, we started to see an increased volatility from that NFP as well. So that's something that I'm just kind of watching out for, especially when I'm trading US30. Now coming on to GBP JPY, we had price creating a new high, rejected, and those buyers up top here, and we start to see a pullback. Very important to notice that that top wick rejection was also in previous consolidation areas here, the historical consolidation areas. So we start to see a nice sell-off happening there, something that I'm going to be watching out for on higher time frames. So I'm not saying that this is going to happen this week or anything like that, but something that I'm kind of watching out for on higher time frames is how market or the price is going to be reacting right into this zone here. So the very first thing that we need is price to continue breaking below this zone here. And then we have some longer term sell opportunities that we can take advantage of, especially as the UK is starting to cut interest rates. Bank of England is starting to cut interest rates, and Bank of Japan is increasing their interest rates, right? So now coming onto the weekly time frame, what we start to see is a massive sell-offs from these previous high levels, and you can adjust this a little bit higher here too. As you drop down to lower time frames, your levels are going to become a little bit more accurate and precise when you start to see more price action. So on the weekly time frame, we created those new highs, price pulled back, and we tapped into those previous areas where price has respected it as support prior to that continuation back up. And then we push right back, and we're kind of consolidating out in this area at the moment, right? So we haven't really broken below the previous lows. We haven't really pushed back up. This new candle has just started forming. So we're just going to give it some room to see what it's going to do. But when price does start to break below this level right about here, I'm going to start looking into some potential sell opportunities to come back down and fill this wick. And then I want to see how price reacts right about here. Drop down to the daily time frame, and you start to see a nice sell off here, and then a corrective move. Come back and respect right into these previous daily consolidation levels, sell off here once again, and we're kind of sitting right into these previous daily consolidation levels. So I'm not looking for a trade in a daily consolidation level, because when you drop down to lower time frames, the price action is just going to get messier. I'd rather wait for cleaner moves, and so that's why I'm going to wait for price to break below this zone. So then we have coming down into around 183 or 182 zones that we can take advantage of. And then after that, look for any potential buy or sell opportunities depending on the fundamentals and the market sentiment at that time. So you drop down to the 4-hour time frame, and then right about here, as we start to approach this level, you start to see some consolidation, a little bit of a sell-off, but then after that, we start to see a little bit of weakening in the candle closures and the price action. We're going to hop over to gold. So at gold, we're sitting at those all-time high levels. So some of the key fundamentals here, once again, were some of the things that we went over in the beginning of this market outlook, which was the geopolitical tensions, investors kind of flocking over to safe haven currencies and commodities, the US election. And then also another thing is interest rates, right? So how aggressive is the Fed going to be, especially with the weak labor market and the weak employment data that we have been seeing. So currently what we are seeing is when you drop down to the week time frame, where you had the previous highs that were forming right about here. Price respected that as support, pushed back up, and then after that, the last couple of weeks, we have been seeing some weak volume into gold here specifically, especially when we're sitting at an all-time high level. We have yet some profit taking to be a profit that needs to be taken. We have yet to experience that. We have yet for price to come back down and correct some of these moves prior to a continuation back up. That is something that we have always seen with gold, especially or any other security essentially that you're trading, is that whenever price taps into those all-time high levels, you start to see some profit taking, some better buy opportunities, push back up, same thing here, some profit taking, comes back and taps right into this area, push back up, essentially the same thing here, right, before we get that volume to continue that bullish momentum. So we're expecting to see something similar here. But as of right now, when you're just simply looking at the fundamentals and the market sentiment, there is some fear in investors. So as of right now, we are sitting at those all-time high levels, and that's kind of what we're expecting to see as well. But when we start to see more data coming out, CPI, PPI, interest rates coming out, all that type of stuff, that's really what's going to feed into which direction are we going to move here. So like I said, when you drop down to the daily time frame, you start to see that we have yet to see some corrective moves here. The market's really just going to collect orders in two ways. It's going to be either corrections or consolidation. At the moment, we are consolidating out for the past couple of days. So if you are looking to trade gold, you are only looking for, potential scalps or even day trade opportunities. When you're looking to swing trade, going back to daily time frame, as you can see, there's not much of a room, right, without the volatility. So that's why dropping down to the 4-hour time frame, you're essentially looking for, buy opportunities from these previous support areas right about here, and then pushing back up into these previous consolidation areas. So you're only looking for day trades or scalp opportunities. That's pretty much it for this week that I'm following. If you guys want me to break down any other pairs, just feel free to let me know. But other than that, I hope everyone has a great week, and make sure you guys are trading safe and not taking any impulsive trades or anything like that.